So howdy folks, quick update on natural gas. I was planning on doing one a little earlier because I've taken a new position, but I was watching the second day of the second Ashes test match at Lord's and I fell asleep, like every normal cricket lover does when they're watching test cricket. For those of you who live in countries that don't play cricket and you don't know cricket very well, it's a 5-day game, and quite often after 5 days it ends up as a draw, so it's not surprising that people take a nap every now and then. Let's have a look at what's going on in natural gas. So we're long from $2.65, actually a fraction below that, half a cent below that, at $2.645. And I just wanted to let you know my thinking on it, just in case you missed my updates on Twitter. Now I can't stress enough, if you want to follow these trades blow by blow, so to speak, you really need to be on Twitter, or you need to be a member in this YouTube channel, and you can become a member by pressing the join button somewhere on the screen around this video that you're watching right now. Let's have a look at natural gas quickly. I've got my commodities chart on here with oil, Brent crude, WTI, Bitcoin, natural gas, sugar, etc. I'm just going to have a look at the one chart, which is my broker's chart, which accurately reflects the price that I'm trading and shows where I got in. So I closed my short position from the top, in case you missed it, at $2.65, just a fraction lower than that. And I actually changed direction, reversed, and bought natural gas at the same price. So we're in long at, call it $2.65. And then after the storage report came out, we got this kind of sharp rally. Now this is a 4-hour chart. It doesn't mean this rally is going to hold or that we're going to carry on moving up. I really don't know. This price is a little bit too high. Perhaps it's not the ideal place to get in. I'd like to get long a little bit lower down into this pink zone or this blue zone below us at around about $2.45 to maybe $2.50 in that pink zone there. So that's the sort of semi-golden pocket, I suppose you might call it, between the 38.2% Fibonacci and the 50% Fibonacci level, which is where the blue zone starts. And below that, we've got the actual golden pocket number, the 618, and that's down at the bottom of this channel. So there's even a chance we could get down there. However, by the time we get down there, if we do get down there, this channel line will have moved up and actually probably met the bottom of this pink zone between the blue and the pink zone and the 50% fib at 245 rather than getting all the way down to the bottom. I think we'll stay within this channel. But that's all conjecture for now because we're long already, and we're long from $2.65, just a fraction below that, and we're holding up quite well. Now I did say in my tweet that I was going to move my stops to break even, and I'm in two minds about that. I might move my stop to just a fraction below the wick of this candle. That would be about $2.61, maybe $2.59 even. So that's about 6 cents below where I got in long, neither here nor there really, and it would prevent us from being stopped out falsely. I do think, however, that if we do get back down to this kind of level, in other words, negate this bullish candle, that we're probably not going to hold, and we will see a move down to these support levels which I described earlier. So I'm still toying up between stops at break even at 265 or whether I'm going to move my stop to 261, 260 or 259. I don't suppose it makes very much difference, and it will just give me a little bit more of a buffer. So that's the plan. Now if this carries on moving in our favor and we don't get stopped out, I'm going to exit this trade at $3, which is up here, which is that spike high. I think that if we break up above this channel and yesterday's highs, we'll move into that liquidity vacuum between roughly $2.80 and $3 and fill that rather quickly and rather easily. So that gap between $2.80 and $3, the price will probably just rush through, smash into $3, and then decide what to do. I'll certainly be out of the market when we hit $3, and that's my take profit. There's a hard TP take profit at that level, and I've got a hard stop loss in currently at my entry price. I might move it down just a smidgen to $2.59, just 6 cents below where I got in. If we do break down below today's lows, then I'm going to start averaging in again at probably $2.50, somewhere around there, and then $2.45 and $2.25, etc., as I described in my previous video, which I'll link at the end of this video. Go and have a look at that for the levels which I'm interested in. So throughout this whole process, and by getting in early now, I'm able to move my entry levels and my dollar cost averaging entry levels down just one section, which reduces the overall risk on my long trade and increases the potential for profit between our entry and $3, which is our exit point. I hope you found all of that useful. The cricket's finished now, so I think I'm going to watch the Russell Brand interview on the Diary of a CEO. There's the link up on the screen for you to have a look at. It's fascinating stuff. I think you'll really enjoy it. What a fantastic and interesting man. And talking about fascinating and interesting, if you found this video to be the same, please give it a thumbs up, share it with your friends, and consider subscribing to the channel. Take care, have a fantastic trading day, and I'll speak to you soon.